Hi, I'm Walter Hamilton, a financial reporter at the Los Angeles Times. Well, trading is wrapped up in the stock market for the year, and let's just say that 2011 was a tale of two continents, or perhaps more continents than that. In Europe and in Asia, stock prices got pummeled and it was very, very ugly. For all those investors who had gone overseas in recent years in search of faster growth, especially to emerging markets such as China, things weren't so good. Now in the US, it was quite a different story. The United States markets generally did pretty well. The Dow Jones Industrial Average rose about 5.5%, which isn't great, but compared to its overseas rivals, it was a pretty good showing. The Standard & Poor's 500 index, to which a lot of individual investors have index funds and their investments linked, remained flat for the year, and when you include dividend payments, it was actually up about 2.5% or so. Again, nothing great in the US, but very good compared to overseas markets. Now in Europe, they were pummeled by the financial crisis that they're having, specifically the sovereign debt crisis, in which there are big concerns among investors that entire nations, Italy, Spain, etc., might not be able to meet their debt obligations. That also hurt the Asian markets, and China especially was hurt by another factor, the fact that growth there seems to be decelerating. The market is still growing faster than most other countries, but investors are worried that it's not going to be able to continue to carry the rest of the global economy the way it has in recent years. The picture was bright, though, however, if you're a bond investor. Bond markets had another good year, and bond investors generally were able to do quite well, and that helped offset some of the damage from their overseas portfolios. So overall, it wasn't the great year that we had last year or 2 years ago as we were rebounding from the 2008 global financial crisis. But 2011, for many individual investors, they will come out better than they perhaps had feared they would, given all the dramatic gyrations in the market and given all the scary headlines that came out of Europe and elsewhere through the year. In 2012, again, people aren't bracing for great news, but they're not bracing for the worst. And if the U.S. economy can pick up a little bit of steam, it might turn out to be another good year on Wall Street.